Hi everyone, I hope you're all doing well. So today I wanted to just talk about the UK inflation, UK stocks. I was actually had a bit of a day off yesterday. Sometimes, between making a video nearly every day and then on the weekends and all, and that's filled with making Patreon content, there's not really ever a day I actually have off from making videos on the stock market. So even though sometimes you'll see me not post on YouTube, then I'm probably making exclusive content on the Patreon. So every so often I just like to have a day off from making content, and yesterday was one of those days. But I was going to come back today with a bit of a HIMS video and talk about HIMS and hairs because I've had a few questions about that stock. Obviously the reason why is because the stock's dipping, and I was going to talk about that. But I thought I'd move that back to tomorrow. And today I just want to talk about some of the UK stocks and inflation in the UK stocks that are dipping at the moment, because there is a lot of weakness out there in the UK. And it's been the last couple of months staring at the UK market and comparing that to the US market and seeing the US market do quite well. And then staring at the UK market, and the UK market has seemed pretty weak really over the last few months. Now, obviously, one of the main things why that's happening is you look at the US inflation has drops rapidly. Right now, if we look at the true inflation on the US, we're at the 2% range, 2.4%. And it looks like the data that will come in for June in July time, that's probably looking that inflation will drop to, I think it's 3.6% that's predicted at the moment. Maybe 3.3, 3.4 is where I think we'll actually come in at. So that's obviously been dropping rapidly. And then we get to the UK. And the UK inflation is still way out of control. So you can see here, CNBC, UK inflation exceeds expectations in May, piling pressure on the government and Bank of England. You can see here that the inflation in May came in hotter than expected. And it rose by 8.7%. So you can see here, this is still, you compare the UK to the US, and pretty much nearly every single country, our inflation is still incredibly sky high at the moment, and it's not coming down at all. And the big difference is, I think, between the UK and like the US, for example, is that this seems to be causing a lot of pressure on the UK stocks now, is that the UK in general is just such a poorly run country. It saddens me a little bit just to see, like, in the UK, we could be a decent country and we have decent companies. And it's just that the people that are out there that makes some of the really important decisions for us are just so bad at them. And then it just affects it affects us, it affects everyday, consumers that are trying to get on with their lives. It affects the businesses, it affects people, international investors wanting to come to the UK, invest in UK companies as they see these headlines. And it's frustrating. It's frustrating to see, like, we should not be in this place where the UK inflation is this high, but we are. We are, because of the people that run this country are just so terrible at it. And it's like when you look at the start of the year and you've seen the Bank of England and they're forecasting us to get to like 2% by the end of the year, and it's like, there's no chance. There's no chance we're getting to the 2% at the end of the year. You look at the US, and the US was saying something similar, and like, we can believe them, but the UK, we just can't. We just so bad. All the people that run the country and do these important decisions for us are just so bad at making them. They're so bad at controlling oil prices. They're so bad at controlling energy prices. They're so bad at controlling this, and it has the knock-on effect that everything else skyrockets, and then prices go sky high because of the pressures of that it's going up and sustaining up. It's not as bad as the US, where the US are going like, we can't justify putting the prices up so much because, inflation has come down, energy costs have come down. And yet we're still here in the UK where energy costs are still quite high considering where we were before the whole Ukraine-Russia situation. And because of that, we're still in a cycle where everything keeps going up and up and up because everything else keeps going up and up. And we can't break the cycle at the moment. And it's just frustrating to see that this is where we are as a country, and this is the UK gets tainted because we're looking at these headlines, and we're a major country that's still bringing out these inflation numbers, which we shouldn't be doing now. And it's certainly putting people off investing into UK companies. And then we look at the next thing about mortgages and interest rates. Obviously, interest rates keep going up and up and up. Obviously, that's affecting potential mortgages, and obviously it takes a while for a lot of these interest rates to come in. I think people always see these interest rate hikes and think, oh, that's automatically priced in. It's not all. For these interest rates to start taking effect in the economy, it takes months and months and months. All them new mortgages that have to go on the interest rates, all the loans that are on lower rates and then start going on the higher rates, and that affects people's incomes. It takes a while for everyone to get onto that where them interest rates are at, and I don't think people realise. And the more that these interest rates go up and up and up, it's not only affecting people right now, but there's a lot of people that will have to adjust to that as well, which obviously isn't great. And obviously that's going to be people's budgets that are affected, and probably seeing the inflation sky high, thinking that the only way the Bank of England are going to combat this is by obviously hiking up interest rates, which is typically the way that you would respond to trying to cut down inflation. And the automatic thing you do is when you see high interest rates, high inflation, is you increase your interest rates. But I mean, let's be honest, interest rates isn't the only thing here that is what would solve the higher inflation. It's all good putting up the interest rates up, but until you're managing the costs that are circling up at the moment because of bad decisions, you're not going to get anywhere, because your energy prices are still ridiculously high, and that's causing, because they shouldn't be this high, it's causing such a knock-on effect. And that's just knocking onto like UK housing companies, for example. It looks like they're looking at the inflation, thinking, if inflation's high, it just means interest rates are going to go higher. That's going to affect the housing market more and more. And you look at the likes of Barratt Developments, and it looks like that's a stock that's recently been pricing in the higher inflation, higher interest rates, and is a stock that's been tumbling down a little bit more and more as we kind of look like we could be heading towards that kind of Liz Truss era again, which caused so many great buying opportunities. But it's crazy to think that we could be heading there once again. And 8 times earnings, 8% dividend yield. Granted, there might be a cut in that dividend going forward. You get the likes of Forterra now, 6 times earnings, 8.9% dividend yield. Granted, once again, you might see a bit of a dividend cut, but it's crazy because you're looking at some of these companies and you're thinking, well, the housing market isn't going to be like this forever. And you're thinking, you're picking up a company at 8 times earnings, 8% dividend yield. And even if the dividend gets cut, you're thinking, well, 2-3 years down the line when the housing market is to recover, it probably will go back to some of the similar levels that we saw in prior years. And it probably then will be able to go back to that dividend. And you're thinking, you're getting these sort of stocks at the moment that pay what the average S&P return is, that S&P return that is 8-9% a year. You're getting that in dividends, like a guaranteed 8-9% return, and then you're not factoring in, well, the share prices are beating down as well because of the situation that's kind of going on at the moment, and it's crazy to see those are the opportunities that are out there. We had another one that was British American Tobacco, BATS. We actually had this one suggested on the Patreon, which is the stock request we do, and basically on the Discord, members of the Discord are able to suggest free stocks for me to have a look at, and this was one of them, and it was a really interesting company to look at. And by the way, you guys that want to see the league table of the stock league, it is on the Discord, so if you want to join that, link's in the description. We've got a live stock league table. I'll update it on the YouTube in probably 6 months time, but if you want a live table, it is there on the Discord for you guys. But we were looking at this one, and same again, it's a company that looks like it's actually moving into a decent place at the moment, and it's 8 times earnings, same again, 8.6% dividend yield. Like, you're getting the average return in the S&P 500. Like, it's crazy that we're seeing these sort of opportunities out here now. I mean, look at the share price drop this one's been on recently. It's crazy that we're getting these opportunities. DS Smith was down 4.7% yesterday, and same again, this one is, since the likes of 2021, this one's down, 35%. They've just actually brought the results out. Yeah, it's not doing anything off the results, actually. This is down as well. And it's, one of the most easy, predictable businesses around. And it's 10 times earnings, 5.5% dividend yield. And you look at the recent results that they just brought out, and the recent results are really good. And you're thinking it's, there's so many where dividend stocks came really popular in like the likes of 2022 was like, quite safe investments. And even there's like, 5% dividend yields, 6, 7, 8% dividend yields out there to pick up. It's crazy to see. But not even that, you're looking at the likes of Keyword Studios. This has been a really hot one on the Discord as well. This is one of the premium companies on the UK, really, really good track record delivering profit and revenue growth. In the last kind of couple of months, this one's dipped out of nowhere as well. I mean, it's just had a 34% fall off, and you're looking at the other one like Team 17. This was once regarded as a gem of the UK stock market. And same again, you're looking at this one, and this one's having a lot of pain. The share price is nearly down 60% at the moment. I mean, SL Capital, this one just continues to drop. This is probably one of the best growth stocks that we've got there on the UK market. And Sure, granted, there's some weakness out there in the marketing environment, and this one just keeps going lower and lower. You're looking at the likes of Legal in General. This is once again a really highly sought after UK dividend stock. And same again, 6 times earnings. You're getting nearly the S&P's average return, 8% on this stock. And same again, since the May time and even recently, the stock just keeps going lower and lower. And you're getting this one on a 15% dip. Or if you go back to 2022, 27% dip. Normally the stock kind of doesn't really do anything. It normally stays flat, but you're getting a 22% discount and you're getting 6 times earnings, and you're getting an 8% dividend yield potentially on this one. Diageo, I know this one's a really popular one. And same again, this one's a stock that's at 21 times earnings, 2% dividend yield. And by the way, I don't know if you saw it. Did you see the name change that happened for National Express yesterday? I mean, this is such a terrible name, isn't it? I don't know who suggested this name and went, you know what, that sounds a really good name. God, it's terrible. Like when I saw the name change in my broker's account, I was like, who is these? Like, I don't know who these are. I've never bought these in my life. It's like, oh, it's National Express. They've changed the name, having the absolutely terrible name change there. But yeah, I mean, overall, the point I'm trying to make is that even though it's quite gloomy in the UK side of it at the moment, and you can see that a few investors have been put off with the UK and UK stocks because of how bad the economy and inflation is at the moment. I mean, there's opportunities out there. Even though there's people that are very bad at managing the economy out there for us in the UK, there's still good stocks out there. There's still good stocks. There's still stocks that, imagine having a 8% dividend yield on the US market on a house builder. The same with the DS Smith, 5% dividend yield. There's some lovely dividend stocks out there, and it's sad to see these all get tainted because we have people that can't manage the economy and do their jobs correctly in key roles here. But you do look at it and think, there's opportunities here, even though there's people that are doing a terrible job running the economy here. There's still fantastic companies, and that shouldn't put you off, like potentially some of these stocks here that are still doing a very attractive stocks that are getting pulled down this market, and there's opportunities out there. So yeah, overall I just wanted to talk about the inflation and how the UK economy is just an absolute mess at the moment, but also that it shouldn't mean some of these stocks are getting pulled down the way they are, and there's opportunities out there, especially dividend stocks as well, are coming in quite attractive, and that was quite rare only a year ago as everyone piled into the safety stocks. But yeah, hope you enjoyed the video. We'll talk about Hims and Hers tomorrow unless any major news comes out. See you in a bit.